Welcome to your daily solo 401k webinar Q&A session with my solo 401k financial, where we help self-employed professionals take control of their retirement without giving up flexibility, choice of brokerage or bank, or compliance. Today's topic is open a solo 401k plan in 2026 and still put 70,000 into a Mega Backdoor Roth for tax year 2025. So this is your chance to get answers. Use the chat to ask questions. As they come in, we'll pause and answer those questions. We use these daily webinars to not only cover certain topics, but also to answer your questions live on the air here, whether you're an existing client, prospective client, or someone who just likes to learn about solo 401k plans. So the big myth is that it's too late to open a solo 401k plan for tax year 2025, since we're now in 2026. Actually, it is not too late to open a solo 401k plan here in 2026, so that you can utilize the solo 401k for the Mega Backdoor Roth strategy for tax year 2025. In other words, you're going to be able to open a solo 401k plan in 2026 so that you can make voluntary after-tax solo 401k contributions for tax year 2025 here in tax year 2026. Of course, before you can even entertain opening a solo 401k, it's important to understand the eligibility requirements. So let's spend a couple minutes on that. So a solo 401k is just like any other 401k, such as a traditional 401k for a full-time employer plan. However, it's specifically for those who are self-employed. So as long as you're self-employed in your business, that's the first eligibility. The second eligibility is that your self-employed business cannot employ any W-2 employees in the business who are not owners. Another way of saying that is common law W-2 employees, which is a way to define a W-2 employee who is not an owner in the business. So as long as you do not employ any common law W-2 employees in your self-employed business who work 1,000 hours or more in your business, then you would qualify to open a solo 401k plan. A couple caveats to that is that you also cannot employ W-2 full-time employees in any other business that you primarily own. There's usually an 80% test. So if you own another business besides the one that you're self-employed in, and that other business has any full-time W-2 employees who work 1,000 hours or more, unfortunately, you cannot open a solo 401k plan for the self-employed business that does not employ full-time W-2 employees or any of your businesses. And you can learn more about that restriction under the IRS control group and affiliated service group regulations. We have a good page on our website that talks about those regulations, as well as a link to the IRS page that discusses those regulations in more detail. You can always exclude anyone who's under age 21, regardless of how many hours they work, from participating in your business. So if you employ a W-2 employee who is not an owner and he or she works 1,000 hours or more. If that individual is under age 21, it doesn't matter because you can always exclude from any 401k plan, including a solo 401k plan, those who are under age 21. And you can always exclude contractors as well. So why are you still able to open a solo 401k plan in 2026 so that you can make tax year 2025 voluntary after-tax solo 401k contributions to then process the Mega Backdoor Roth? Well, one, the voluntary after-tax solo 401k contributions are different from employee contributions in that they're subject to the overall 415 limit. Therefore, you're not required to open the solo 401k plan by the end of the year in order to preserve the right to make contributions in the following year by the business tax return due date plus timely filed extension. And that's good news for those who are self-employed and are looking to take advantage of the Mega Backdoor Roth solo 401k strategy for tax year 2025 here in 2026. So we've already established that you can open a solo 401k plan in 2026 so that you can make tax year 2025 voluntary after-tax solo 401k contributions. The next phase is understanding those deadlines to both open the solo 401k plan here in 2026 and to make those voluntary after-tax solo 401k contributions for tax year 2025. So that's driven by your self-employed entity type. So if your self-employed business is an S corporation, then you can open a solo 401k by March 15 of 2026. Or if you file for an extension by September 15 of 2026, if you file that business tax return extension for that S Corp. You would have until those time periods to both make the voluntary after-tax solo 401k contributions, and then you can convert those funds immediately to the Roth solo 401k or the Roth IRA. If your self-employed business is a sole proprietorship, then you have until April 15 of 2026 or until October 15 of 2026 to both open the solo 401k plan and make those voluntary after-tax solo 401k contributions. For a partnership, you have until March 15 of 2026 or September 15 of 2026 if you file a business tax return extension to both open that solo 401k plan and make those voluntary after-tax solo 401k contributions. So you would have to open the plan by those specific dates mentioned there and also make the contributions by those specific dates mentioned there. Now, we're not talking about employer contributions today, but you can actually still make employer profit sharing contributions for tax year 2025 if you open a solo 401k plan here in 2026 as well. For a sole proprietorship, you can actually still even make employee contributions, but you would have to open the plan by April 15 of 2026 and also make that employee contribution for tax year 2025 by April 15 of 2026 for tax year 2025. But today's webinar is honing in on the Mega Backdoor Roth, how you still have time. We've actually covered employer contributions and employee contribution deadlines in past webinars here over the last week or so. So if you subscribe to our YouTube channel, you can view those past live streams. We have over 1,100 webinars there. It's free to join. You can also like us across all the different social media platforms. That would really help us to get the word out to other solopreneurs like yourself. You can also join our My community, where we have over 32,000 members, and you can post forums and even guest blog posts. And if it's free to join the My community website as well. So let's continue here. So again, the deadline for the Mega Backdoor Roth for tax year 2025 is you must adopt, that means sign the plan documents and open those holding accounts, aka bank or brokerage accounts, and make the contributions here in 2026 by the business tax return due date. Or if you file for an extension, by the tax extended deadline, so that you can contribute for tax year 2025 here in 2026. These slides break it down per entity type. We've already gone over that over a high level. So let's talk about what the Mega Backdoor Roth is. So the Mega Backdoor Roth is a way of indirectly contributing more Roth funds into your retirement account because you make contributions as voluntary after tax. So just like Roth solo 401k contributions are made on an after-tax basis, same thing with voluntary after-tax solo 401k contributions. You don't get a tax deduction when you make voluntary after-tax solo 401k contributions, but you forego those, or you forego saving on taxes for tax year 2025 by making it as a voluntary after-tax solo 401k contribution, by converting it to the Roth solo 401k or the Roth IRA, but all the gains once inside our Roth IRA. So once those voluntary after-tax solo 401k funds get converted to the Roth IRA or the Roth solo 401k, the good thing is that it's going to grow tax-free. So you give up saving on taxes now by making it as a voluntary after-tax solo 401k contribution, because it doesn't reduce your taxable income in the year that the voluntary after-tax contribution is made. But again, the result is that once you convert those voluntary after-tax solo 401k funds to the Roth IRA or the Roth solo 401k, all those funds are going to grow tax-free. So you're not going to have to pay taxes on those earnings. So that's why you want to convert those funds right away. After you make them into the voluntary after-tax solo 401k bucket, you want to make sure you convert those right away to the Roth solo 401k or the Roth IRA so that there are very little gains. Because just the gains, when they get converted to the Roth solo 401k or the Roth IRA, will be taxable. So this slide is an example of a one participant solo 401k plan. So let's say you're self-employed as a sole proprietor. You're exploring opening a solo 401k plan here in 2026 because you had earned income from self-employment activity in 2025, and you find out that you can actually open a solo 401k plan here in 2026 so that you can make tax year 2025 voluntary after-tax solo 401k contributions. So the plan will be sponsored by your sole proprietorship. A solo 401k plan is a defined contribution plan, which means that you are required to have separate holding accounts, aka bank or brokerage accounts, to hold each source of funds. So here you're going to have three different buckets, aka holding accounts, brokerage accounts, bank accounts, whichever type of holding account you want to open for that plan. So it's just one plan with three separate, let's say, brokerage accounts. Let's say you use Fidelity to hold the solo 401k funds for the plan that we offer here in my solo 401k financial. We would help you to open up three separate brokerage accounts at Fidelity: a pre-tax bucket, a Roth solo 401k bucket, and a voluntary after-tax solo 401k bucket. Obviously, since you're a sole proprietorship, you still have time to make employee contributions for tax year 2025. If you open that solo 401k plan here in 2026, by April 15 of 2026, you'll be able to make those employee pre-tax solo 401k contributions to that pre-tax holding account. And then when you make the voluntary after-tax contribution, it'll flow into the voluntary after-tax solo 401k brokerage account. Once you contribute those funds to the voluntary after-tax solo 401k bucket, you then convert those to the Roth solo 401k. And once you convert those to the Roth solo 401k, you then will complete our online Form 1099-R request form so that we can issue a Form 1099-R to report that non-taxable conversion to the IRS. So that's the Mega Backdoor Roth conversion process. That's how it works. This slide here is an example of a two-participant plan. Let's say you and your spouse are both self-employed in the same self-employed business. The business sponsors the solo 401k. The rules require that each participant has separate holding accounts for their respective fund sources in the plan. So you would each have separate holding accounts. Therefore, you would each be able to perform the Mega Backdoor Roth solo 401k strategy, because your contributions to your plan would be based on each spouse's separate self-employment income under that self-employed business. For tax year 2025, you can contribute a total of $70,000 as a voluntary after-tax solo 401k contribution. Keep in mind that voluntary after-tax solo 401k contributions do not include catch-up contributions. In short, you can never contribute catch-up contributions to the voluntary after-tax solo 401k. So only the overall limit for the year, which is $70,000 for tax year 2025, qualifies as voluntary after-tax solo 401k contributions, and subsequently for performing the Mega Backdoor Roth strategy. So with respect to how this setup is going to work, here in my solo 401k financial, we'll go ahead and create that solo 401k plan. It's going to have custom language regarding how you can make voluntary after-tax solo 401k contributions and also process conversions, whether to the Roth solo 401k or the Roth IRA. And then we're going to help you to open up the holding accounts for the solo 401k plan. You can use your local bank or a brokerage firm like Fidelity, Schwab, Altruist. You get to choose the brokerage firm as long as that bank, credit union, or brokerage firm is on board with opening up the holding accounts. And we know that both Fidelity and Schwab do provide brokerage accounts for the self-directed solo 401k offered by my solo 401k financial that has the capability of allowing for the Mega Backdoor Roth strategy. So even though Fidelity and Schwab also offer their own solo 401k, that does not allow for the Mega Backdoor Roth. They will also provide what they refer to as non-prototype, aka company retirement brokerage accounts, or a solo 401k plan offered by my solo 401k financial. So we'll help you to open up those brokerage accounts. We'll help you with the calculations. We'll help you with the conversion of that Mega Backdoor Roth, as well as reporting it and the ongoing compliance support. So again, when you want to utilize the Mega Backdoor Roth strategy, you need to make sure you open a solo 401k plan with the solo 401k provider like my solo 401k financial, whose plan allows for the Mega Backdoor Roth strategy. And then once it's open, we'll help you to open up the holding accounts and then run the calculations for making that voluntary after-tax solo 401k calculation for the contribution for tax year 2025. And as long as those contributions are made by the business tax return due date or by the tax return extension due date for that business, then it'll count as a tax year 2025 voluntary after-tax solo 401k contribution. Whether you should convert those voluntary after-tax solo 401k funds to the Roth IRA or the Roth solo 401k is a question we quite often receive. This slide here will give you an idea as to whether you should convert those voluntary after-tax solo 401k funds to the Roth solo 401k or the Roth IRA. We find that most clients will convert those voluntary after-tax solo 401k funds to a Roth solo 401k because the solo 401k plan allows for participant loans, consolidation of all your retirement accounts under one plan. A Roth solo 401k is not subject to required minimum distributions either, just like a Roth IRA. But again, you get to choose whether you want to convert those voluntary after-tax solo 401k funds to the Roth IRA or the Roth solo 401k. It still results in the same reporting with respect to having to issue a Form 1099-R to report that conversion to the IRS. So who's this strategy for? Any self-employed business type can open a solo 401k plan, whether sole proprietorship, business, S corporation business, C corporation business, partnership business. So really it just comes down to those who are looking to utilize the Mega Backdoor Roth strategy. And of course, you have to be eligible to open that solo 401k plan. Common mistakes to avoid is opening a solo 401k plan with a provider that does not allow for the Mega Backdoor Roth strategy. And also missing the deadline of utilizing the solo 401k plan here in 2026 so that you can make tax year 2025 voluntary after-tax contributions. So why my solo 401k financial? Well, we'll provide a custom plan that allows for the Mega Backdoor Roth strategy. You get to choose where to hold the money at or the funds at, whether your local bank, credit union, or a brokerage firm. We handle the compliance reporting, and we're the plan document provider. So not only do we perform Form 1099-R reporting for distributions, conversions, we also provide Form 5500 Easy support. A Form 5500 Easy is an informational return that applies to a solo 401k plan once the market value of that plan is over $250,000 in value as of the end of the plan year. And we will go ahead and prepare and file it with the government for you electronically. You just need to make sure that you timely request both the 1099-R and the 5500 Easy because we never have access to your funds. So as long as you timely request those, that'll be covered in our annual fee at no additional cost. So the final takeaway here is that for tax year 2025, it's not too late to open a solo 401k plan here in 2026. Buy your business tax return due date plus timely filed extension so that you can make tax year 2025 voluntary after-tax solo 401k contributions and perform the Mega Backdoor Roth strategy. All right, I don't see any questions at the moment. So that's it for today's session. Thank you so much for investing your time with this. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here again later today with more crucial content. Until then, have a great rest of the day.